Not so long ago, I didn't own a single asset. I had a bunch of debt and I was living in a tiny basement apartment. Now I'm proud to say, fast forward to today, I own a $7 million real estate portfolio, and I can confidently tell you, if I had to restart from zero, I could pick myself up and do it again because I've already done it before. And that's what we're gonna talk about in this video. I'm gonna give you a step-by-step guide, a roadmap on exactly how I would do it if I had to start all over again. So the first thing you're going to need to do is get a job. You're gonna have to have some income on paper. Now, if you are producing a low income, well, it's gonna be tougher for you to get a mortgage. And that's the same position that I was in, so don't worry. What I did when I was starting off is I tried to find ways to maximize all of the income I could produce. And I was giving my time away for money. So what I did when I started is I had my normal 9-to-5 job. I wasn't making too much money, but on the side, I was doing door knocking for sales companies. So these were zero salary jobs, but 100% commission. I was doing grass cutting. I was doing grocery delivery services, working with real estate agents to do their marketing. So I was door knocking for them, and I was managing their social media. So there's a lot of different ways that you can produce income on the side if you are a low income earner today and need to produce that extra income to save for your down deposit. Again, there's many different ways that you can get a side hustle and produce income for your time. In the beginning stages, it's probably likely that you'll have to do that if you are not making as much money as you need to get a down deposit right away. So the second thing you're gonna have to do is learn how to budget. What worked for me was having a yearly goal, but breaking that down into a goal per day. So for example, let's say I wanted to save $12,000 in a year. Well, initially that was something that sounds very daunting. $12,000 in a year is $1,000 a month. And let's just say I was able to save like $1,000 in 1 month. That's nowhere near to the goal for the year. So in my mind, it was very mentally straining, and I was always like giving up because I was just so far away from this $12,000 goal because I was thinking about everything on a yearly timeline. So what I learned was to break down that yearly goal into a daily goal. $12,000 per year is $1,000 a month, which is roughly $33 per day. I can probably tell you're already thinking about ways that you can save $33 in 1 day. And that was huge for me. And once I got into that mindset, I was able to really manage my money and understand where it was going and save appropriately so I could get that down deposit as fast as I could. Now, here's the thing. Having a job and having some money as your down deposit is still not good enough. You need to have good credit. This is critical when it comes to real estate investing. Again, you could have all the money in the world, but if you have terrible credit, the banks are gonna give you a much higher interest, and that is an additional cost that will just eat up from your profitability. That is something you want to monitor and understand throughout your life as early as possible. Just start understanding what your credit score is today and what you need to do to improve it. Okay, so now we're talking about the foundational stuff, right? We got to a position where you have a really good job, you're making money, you have a good savings plan, you have a good credit score because you're continuously monitoring. You have multiple visas and credit cards that you're paying off consistently. So you are in a good spot now to start thinking about your first real estate investment property. And this is where the real fun starts. Now, investing in real estate can be a very scary thing, right? Especially in today's market with all the prices and scary news on the interest rates and inflation and all this stuff that's going on. I completely understand that this could be a very, very scary time to invest. And it probably is. If you ask me again, how it was like buying my first property 8 years ago, it was the scariest time of my life. The prices were high. I had no idea what I was doing. I was responsible for all these tenants. I had all this fear of what was gonna happen if my tenants destroyed my property, if I chose the wrong tenant, if the tenants weren't gonna pay, or they're gonna trash my house, and that's just natural. So again, it all depends on the situation that you're in. If you can support it, if you can financially back it up, and you find a place that mathematically makes sense, I don't see why you wouldn't want to invest in that place. You have to be in a position for it. You have to be ready. And again, no matter what time period you are in history, and even in the future, You're always gonna have news and some fear of investing, but you have to overcome that if you want to. Okay, so now let's talk about the type of property that would make most sense. So in real estate, there's two types of strategies that you go for. You have cash flowing properties. These are the houses that you buy at probably a cheaper rate or something that's less expensive, where you have a lower mortgage and you get high rent. And then, so essentially you're getting a very nice monthly profit per month. That's the cash flowing strategy. The second strategy is appreciation. You're going for those very hot markets that have high demand, that have very high growth rates, and you invest in those areas that might be a little more expensive, but the bet is that the appreciation will just continue going because the demand is there and you make money off the appreciation. For me, the best strategies combine best of both worlds. I want a house that's going to appreciate because that's where the real money is. That's how you get rich. And I also want a house that supports itself and gives me a monthly profit. So I can make that money and reinvest that money. And it's like I have a second or third or fourth job because these houses are producing an income for me. So the strategy that worked for me that I started out with was student rentals. And this is just such a beautiful strategy because inherently, it's a very easy strategy to understand. With student rentals, inherently the demand is always high. And that's a good thing, and investors see that as a very good positive, and that's what keeps the value of these houses near good universities and colleges very nice and high, and also appreciates even when times are tough, because they know students are always gonna need an education and they're always gonna need a place to live. So the strategy in itself is pretty recession proof. It keeps the appreciation level set and it keeps going up as rental prices go up, and they know that demand is just high. So that's one thing. So it's really easy to understand student rentals, the location and why they would appreciate. The other part, what I do is find student rentals that I can maximize or increase the number of rooms. So I look for houses that have a lower number of rooms to start with, where I might be able to add some additional units, like in an unfinished basement, or even in the back if I have enough space in the back. I've done it all. So you find a place that's a little cheaper with less rooms, you secure it, get a good mortgage on it, something that's much less in terms of price and cost. And then what you do is you increase the number of rooms. So for example, the latest one that I did is I went from a 3-bedroom that I bought for $300,000. I put a 20% down deposit on it, and my mortgage is like $1,300. I was able to add 4 bedrooms with an unfinished basement, another ADU in the back. So I was able to add 4 new bedrooms for pretty low cost. It was around $50,000 all in. So my all-in price was $300,000 for the original purchase, $50,000 for the renovations. My all-in cost was around $350,000. And the property itself now, because of that increased rent, is now worth $650,000. So I just did a forced appreciation. I increased my equity by $300,000, and my rent coming in on a 7-bedroom student rental is $4,200 per month. And that's based on the original $1,300 mortgage. So my cash flow is through the roof, and that's just one property. So if you wanna learn exactly how that story went down and how I did that in less than 6 months, check out this video here.